Shifting focus, we discussed the risks to the market in detail, but what are the triggers lined up ahead? Because if you look at elections, that's pretty much factored in. Earnings is something which you're saying in your note has peaked out. In that context, what should be a realistic return expectation from the markets this year then?
We're not saying earnings are peaked out. What we are saying, profitability has peaked out. That is, margins have peaked out. Obviously, raw material prices have come off very sharply from the second quarter FY 2023, and margins have expanded quite significantly. So, over there, I would hope that volumes start picking up because going forward, given the fact that the tailwind of margin expansion will no longer be there, at least from the first quarter FY 2025, the margin expansion story will probably get over. I think there's just one more quarter, I would say. If by that time volumes don't start picking up, then you would have this unfortunate situation of muted top line growth and muted bottom line growth. Unlike currently, where you're seeing muted top line growth, but very strong bottom line growth. Yeah. So, if that doesn't pick up, that itself becomes a concern for the market, given the fact that valuations are at fairly high levels, and if you don't see recovery in volumes, and profitability has uh, seems like it has already peaked at fairly high levels. Unlikely it can expand further from current level. Then what? Then the profit growth is going to languish in that case. In that case, we'll probably see some downward revision to earnings. Multiples start looking even more expensive. Maybe that's when some correction takes place as far as some of these expensive consumption names are concerned. Um, Beyond, I don't know, triggers, as we were discussing earlier, at some point in time, the US Fed will cut rates. March doesn't look like. Maybe in the May policy meeting, that's the first rate cut, followed by probably more in the second half, for whatever the number may be. But that seems to be a well-known fact. I don't know whether there's going to be any major negative or positive surprise over there. Elections is anyway looks like a done deal based on whatever survey results and political commentators are suggesting. No negative surprise over there too from a market perspective. So I don't know. It seems like a reasonably decent setup in the sense, everything looks good for the Indian market. And even in a global context, given China struggles on a relative basis in emerging markets, India again looks, pretty decent. Yeah. So beyond valuations, everything else looks quite okay, I would say, for this market.